Hey everyone, welcome to the KE report and a company update from Kuya Silver. The president and CEO David Stein is joining me. Kuya is traded on the CSE under the symbol KUYA, on the OTCQB under the symbol KUYAF, and the Frankfurt Exchange 6MR1. David and I are going to be talking about the operational update and production ramp up, a news release that came out May 5th, all from the Bethania Silver Project in Peru. Now, David, let's recap Q1. This is a production ramp up. The company is working to get to, I think, a long term target of 350 tons per day, but that all takes time. So Q1 was better than the production we saw in 2024, but that's also when you just started producing at this mine. Let's talk about Q1. Give us just an overview or a recap of the production that you saw in the ramp up in Q1, please.
Sure. And yeah, before I do that, I want to emphasize that 350 is a nearer term goal, but that's just our phase one for Bethania. And we think we are going to grow it to be much larger than that in the coming years. But anyway, getting back to your question on Q1, I mean, Q1 was significant because it was the first quarter where we really had daily drill and blast operations. And of course, which we didn't have throughout the full 2024 as we were ramping up for various reasons. We were able to get, I would say, much more kind of steady and daily efficient, not just production, because obviously so there's some more production, or I should say mineralized material production, which we then sell as concentrate. But also we're still doing a lot of development in Q1. We were doing some special projects in the mine that needed to be done. And so there was sort of a whole bunch of things going on. We were trying to sort of lay a foundation on a base in which to then ramp up the mine more quickly in the second half of the year. And I think we're already seeing the fruits of that labor, here in the month of April, which is now over, and then in the early first few weeks of May, things are looking very good.
David, one thing that stood out to me was in Q1, you saw average higher head grade of silver and lead and zinc, actually. Overall, silver equivalent from 2024 was about 320 grams per ton. In Q1, it was 385 grams per ton. Where did this increase in grade come from?
To be honest, it's because we did process some low-grade stockpiles in 2024, and that it was part of the tonnage. And the reason we did that was we were still kind of testing out the mill and doing our first batches in the mill, and so we wanted to see how that would go. And we're not doing that at the moment. We're basically processing all fresh material that we're getting from the mine now. So that is probably the main reason why there's that big jump in grade. And then it will vary as we go from quarter to quarter, obviously, because some veins in some areas of the mine are going to be a little higher, a little lower, but it should sort of average out to what we had in the PEA, to be perfectly honest.
Just remind us, what was that number in the PEA, please?
I'm going to say it was around 12, 13 ounces equivalent. So that would be sort of in your, 9, 10 for silver, and then the rest would be the lead, zinc. And as you see in the press release, we do get paid a little bit for gold right now as well. And so that will, we have a little bit of gold as well.
Okay. So that silver equivalent wise, kind of around where you were in Q1 then. I also saw average recoveries higher across the board, silver, lead, and zinc. Is that also just because of the material that you're processing, the change from 2024?
So yeah, the difference between 24 and Q1 is mostly related to that, because we do get lower recoveries on the stockpile as well, or definitely partially that. With that being said, we have been, every batch that we do in the toll mill, we are tweaking the process, and we're getting better and better about optimizing recovery. So for example, and we did say this in the last press release, that the first batch we processed in April, we actually got our silver recoveries up to 94%. So that's pretty much close to the maximum that you're going to get. 94, 95, 96 maybe is the most you'll see at any, polymetallic silver mine that like this. So we're getting pretty close to the max there, which is awesome, which is a great credit to our team that are there and monitoring the processing at the toll mill. And then obviously we're pushing up higher recoveries on the lead and the zinc, which are not, they're not hugely material, but it all helps.
Okay, let's talk about the ramp up then. One of the keynotes from the news release said that you accelerated the ramp up as daily production throughput doubled in the final 10 days of April. Can you tell us what this throughput was?
Yeah, well, yeah, if you do the math on the numbers in the press release for Q1, doubling we're looking at, somewhere around 15 tons per day at the end for the last 10 days of April. And I can tell you, we're now in over a week in May that it's continued to ramp up from there, and now we're probably pushing 20-25 tons today. So it's starting to ramp up quickly now after a kind of a slower start in the beginning of the year for the reasons I already mentioned. And that's kind of where we're at right now.
Okay, let's talk about the guidance for the rest of this year. I think that's what's probably most important here. In Q3, your goal is to reach 100 tons per day, and then Q4 is to be operational break even. Walk us through the stepping stones, what you need to do to get to each of these levels, the Q3 100 tons per day and the Q4 operational break even, please.
Sure. So if we go back to April, the big sea change in April, really happened around the middle of April, and in terms of our ramp up, in terms of our daily production. And what happened, around that time was we closed that financing. So the last financing that we did, which, again, going into the year, we didn't expect or think or hope we needed that, but we, in a couple months into we saw the mine was kind of get it, undercapitalized, and that a little bit of money would go a long way to, putting some juice into the ramp up. And indeed, that's been the case. So as soon as we had, we were able to invest a bit more into the mine development, we've seen that translate almost immediately into higher production, and we expect that to continue. So really, that's going to be the difference between, kind of Q1 and, Q2. End of Q2, we should be, going into Q3, we should be pushing up towards that 100 tons per day. The operational break even is more of a financial metric, obviously. So what we're talking about there is basically that the mine is, paying for itself, all that it's at least, cash flow neutral. And yeah, I mean, I think, that could be at around 100 tons per day. It could be a little more, or a little less. That'll some degree depend on the silver price as well, and other factors, recoveries, et cetera, et cetera. But, it could be very soon after the 100 tons per day, or even at the same time, or it could be a month or two after that. But it's all of those things are somewhat related, and it's obviously great, great to see. It'll be great when we have mine essentially, the day that it pays for itself means the next day it's going to be generating profit for us, right? So that's an important milestone for the company, because obviously that's what, we're in the silver mining business here, and we're doing it to make money.
Yeah, that's huge for the company. That's a lot of the questions I get is when will this mine be making money? Now, the big picture for the second half of this year is to scale up your underground infrastructure, get production towards 350 tons per day. Question that came in was, do you have the funds available to make this happen? After the last fundraising, as you just alluded to, that helped to ramp up production. Will you need to go back to market? What does that road pathway look like in terms of funding to get to 350 tons per day?
So at the moment, we don't believe we need any more money. Certainly, equity financing, we're not looking at doing that. I guess as the year goes on, if the silver price continues to move up, then we'll make maybe perhaps a little bit more profit than we're forecasting internally. And that what we can do with any extra money that we find that we have, whether it's from exercises of warrants or extra profit from the mine because of higher silver prices or whatever, is that we can take some of that extra cash flow and essentially reinvest it in the mine to accelerate the ramp up even further. There is definitely a trade-off analysis that takes place in terms of, putting more money to get a quicker payback. And, that's something that will be an ongoing thing over the next, year or so. So that's sort of, the best guidance I can give right now is that we have the money we need to ramp the mine up, but if we do have any type of sort of positive windfall, we can potentially do it even faster, which is great. But with that being said, we do also want to get into exploration and start doing some exploration at Bethania. So we probably don't put every single dollar we make into mine development. We also will be allocating some of that cash flow to exploration. And, in the near term, we want to do underground drilling. That's something really quick and cheap we can get going on and will generate, we think the lowest of the low hanging fruit kind of results for us because, we know the veins continue to at depth and we just need to, do more drilling at depth to start extending the model deeper with all of our various silver veins that we have in the current resource model, and so that's something that is a big focus for us as well. And we want to do both, so we'll see how things go with the cash flow in the second half of the year and into 2026.
David, final question then. What about guidance for 2026? When could we see that? What does that hinge on?
Well, as kind of I alluded to, there's a operational aspect, which again we believe that we've got in very good shape now, and then there's also stuff that's not in our control. The equity markets, the silver price, and it will affect exactly when things happen and how much money we make. But these are all good problems to have because frankly, if we're talking about we're worrying about a dollar here or there on the silver price and how much money we're making, then frankly, I think a profitable silver company with the Bethania Silver Mine as its flagship asset should be worth way, way more than we're trading at today. So it's a good problem to have. But I think in the next at the at in the next at the end of the next quarter, operational quarter, so Q2, so not the Q1 financial results maybe, but perhaps at the end of Q2, we should be in a position to give more clear guidance. Now, whether that's a range, it might be a range of outcomes, but I think that's when we'd be in the position to give more guidance into 2026.
Okay, David, thank you very much for this update. I'll post a link to the company's website so everyone can read over that recent news. And please keep on sending me the questions you have for David. I see a lot of them come in on this production front and the ramp up. So I'll follow up with David as we get the Q1 financials and any other information on production and also exploration. So, David, thank you very much for the update today.
Thanks, Corey. My pleasure.